The madness in the market reached a new level. We have a ceasefire between Iran and the US. The US stock market is exploding out of that. We have a huge green bullish candle today, 3% plus for the S&P 500 and for the Nasdaq 3.5%. How should we handle this and what will the next few weeks bring? All of that in today's episode. Let's go. Hello and welcome guys. I'm gonna do a quick update video. In my view, to be honest, not much has happened, especially not in crypto right now. If you zoom out a little bit, we are still in the same range. It feels crazy. It feels like we're doing something spectacular here, but structurally speaking, we are still at the same price we were in February. So nothing to be super excited about on a higher time frame level. I'm still in the short. I'm still TPing. Should we go higher? I'm still TPing. Should we go lower? Because as mentioned before, should we get another liquidation cascade to the downside, the worst part of the bear market to happen? And in this part, usually lots of exchanges and everything fail, and I don't want to have too much exposure on those. So either way, we go up, I make money. We go down, I make money on this position, and it's still at solid 16R from the top. We have ETH right now in the same range, pretty much similar story. I have still my long running, my spotlight long. It's a huge position. It's a good counter to my short. As I said many times before, if you trade higher time frame, don't zoom too much in because as I said, nothing is really happening. I mean, as I said, I expect a bounce from here, and this could have been the bounce, and we could have gone lower from there. We could have seen a real bounce into this next resistance level here, or we might even go up here. Nobody really knows, and it doesn't really matter because I'm prepared for both outcomes, and so should you. I also took a lower time frame trade on Pepe here. It would be an insane RR monster, but obviously it's on way lower risk as the ETH long here with the very wide stop loss. And so you see, it doesn't really matter what happens to me. I have my main bias. I have still the same bias that this year is probably rather looking bearish for most markets. But at the same time, it doesn't really matter because I make money when we go up, I make money when we go down. And yeah, this is like the best place you can be in, right? This is real probabilistic thinking. You have a thesis, but you also have a counter thesis for that, and you're prepared for both of them. Looking at the SPX, we have a massive pump. I'm honestly surprised that this pump is so big, but hey, here we go. It is super big, and it's going against my short from the top, or my two short positions from the top, which is obviously not nice. So I'm not sitting here and thinking like, oh yeah, that's good, it's going against me. But overall, it's totally fine for me because I have so many different short positions, and on some of them I TP'd already. I decided to not TP on this one. I could have, I didn't. Maybe it was a mistake, maybe it wasn't, we will see. But worst case, I go out around break even, and I was prepared for a potential bigger move to the downside, for a bigger bear market, and which I still honestly think is not really it's not really off the table so far. I'm willing to be proven wrong. I can also show you some long setups in the TradFi market, which make me prepared for this potential outcome as well. And just it's not that I'm saying you should look at old fractals and you like put them on the chart like one to one. It will never happen like this. But what's very interesting is to just look how like moves to the downside and moves to the upside usually happen or have happened before. And with this information, you can then say, okay, is this out of the norm or is it not? And I would say it's like, it's a bit out of the norm because it's so big. So we have a like 10% move to the downside, and now we already have a almost 10% move to the upside. But looking at history, we have here a 10% move to the downside, and we had then a 5% bounce. We had here a 12, depends on where you measure, 15% move to the downside. We broke structure here, and we had a bounce of 12%. And I also remember that around this time of the year, we had the Ukraine war breaking out. You see Q1, and then late March, we get a pump into April and then start rolling over again. It's not the same, and it will never be the same. But I'm just saying, by looking at those things, you will figure that many things can happen. And just because we have this crazy pump, just because we have the potential ceasefire now, which is really a bit messy in my view, because you still hear stories about bombing, you still hear different sides of the story. So we will see how this plays out. It all reminds me so much of this tariff noise last year, where you have like an agreement and you have none and blah and this and that. Only that this war is really impactful on the whole world and the global market, because oil is not just affecting the fuel prices. Oil is affecting all kinds of products, and these products, like for example, also the food industry needs fertilizers, and they also come from this region. And oil itself is pretty much needed for every single industry out there. There is no industry running without oil. And so this is way more important than the tariff noise, and it has way more impact. But it reminds me from a structural perspective how Trump and how the news outlet and everything is framing this. It's so similar. And yeah, so just saying. And also look at these few examples here. We also have here a 15, 18, 20% move to the downside, and then we have a 30% bounce. And so this is nothing uncommon that we have bounces on the way down. I mean, as said, this bounce here, oh, there's actually right now, we can't see it on the SPX chart. It is violent. It is huge. I didn't expect it to be so huge, but if you remember in my last video and also in some posts, I said I expected to not move in a straight line from here, simply because we are hitting this demand, you can call it, but the main driver is that we lost this low, and losing this low was making people so bearish because structure is breaking to the downside. And now we have this huge bounce catching people off guard. And you could argue with my short positions, I'm also caught off guard to some degree, because my main bias was that the bounce would be a little bit lower and then we roll over again. So far it didn't happen, and that's why I like to prepare for other things as well than just my main bias. Also a good example here is Hyundai. I like the company because they are actually pretty involved in the robotics sector, and they are also, I think they have like 80% of Boston Dynamics. And this is one of the main developers of robotic technology. So they're pretty advanced already in their technology. And these little robots, they look like this. And I'm gonna show you something right now, actually. Let's look at it right now. We have the World Ahead 2026 here. We talked about this before in some other videos. And look at this. We had the first quarter here, and we had this boat here, and you could argue that this is maybe oil or whatever. Looks like an ancient Middle East ship, almost a bit Egyptian. You have rockets, you have satellites, you have definitely a lot of war machines. From here on, like, let's imagine this is the first quarter of the year. We have tanks, we have weapons, we have some ground machines, and look at these little fellas here. Interesting, isn't it? And they look exactly like the Boston Dynamic robots, the dog-like robots. And as said, Hyundai, back to Hyundai now, it has an 80% share of Boston Dynamics. So Hyundai is pretty involved in robotics, and I think robotics is going to be, regardless of the whole economist kind of thing, robotics is going to be a big one in the coming years or even decades. And yeah, we are now down 40% from this high here. We are back at this demand, and you guys know how I structure my trades. If you watch how I apply my strategy, pretty much, you know that I wait for a shift in momentum or a break of structure. And usually what works pretty well is just dragging this trend line. And as long as this is not broken, why would I even bother to enter? Because you could argue here's a gap and we have the point of control here. So there's a pretty strong area, but you see price didn't care at all. We just nuked lower from here. And if I would just enter trying to predict the market, trying to outsmart the market, saying like, oh yeah, I know what's going to happen next, I would have been down now 10%. And I mean, it's not that bad if you see it from a higher time frame perspective, might as well be all right. But if this happens, you're down way more. And then you ask yourself, should I buy more? What should I do? This is not how we structure trades, right? And so I use this execution strategy simply to say, okay, momentum is still pointing down. And as long as momentum is pointing down, I don't even bother to enter here. Why would I? And once I get my confirmation, and this might be a violent confirmation, breaking out here, going up here, and then still I could enter at the same price as of entering here, but I have two things then. I have first of all a shift in momentum, which adds confluence to my idea of going long there. Plus, I can then say, okay, I put my stop loss below this low here, because if this structural low is breaking with a confirmation, again, like a close or whatever on higher time frame, I say, okay, the thesis is invalidated, but on the way down, if you try to catch the falling knife, where will you put your stop loss? You can try to play it tight here, you could stop. You can play it super wide, and then your stop loss is above this, below this major low here, like 20%. Yeah, but this is not what we want. We want to refine it. And so I wait for this confirmation. And it's a prime example why, in my view, looking at the structure here to the left and then saying like, oh yeah, this is a gap and this is like all the confluence and point of control and this and that. It doesn't work like that for me, at least. And yeah, prime example. Should we get this breakout, I'm going to go long. And you see, it doesn't really matter to me if I'm still short the US stock market, because I will always find opportunities to go long again. Worst case, I round trip those ideas and I pay a stop loss break even or re-enter even once this is unfolding completely. We will see, time will tell. But I have taken also some longs here in gold. If you read my PDF, which I shared in the MMA, when gold drops like this, it's usually a good time to buy. No need to outsmart it. I already TP'd on the shorter term position, but I also acquired some longer term gold. Even though it's not very optimal, so the size is pretty low. Looking at this, this will come tumbling down at some point, and so the size is not really big at all. And then we have some other plays. As said, I'm always long, I'm always short, so you will usually never see me saying like, oh yeah, this is going to happen for sure, I'm 100% in this or that. Here, Etsy, interesting concept. They have like an Amazon-like store where people can sell homemade stuff or handmade stuff, I mean. And this is interesting because I think people are going to get sick of all the AI created, no quality, no love kind of products, and many people will circle back to handmade stuff. So this company could be very well positioned for that. And if you go back to the 0.5, it's already a very nice performance. I like the company from a fundamental perspective, but as usual, chart above everything else. And also one I've looked at for a very long time already. I found it here. I said, okay, this is not what I want to buy, right? Overextended, super all-time high. And now we have a 50% pullback. We have a break of this momentum. It's still not a super very optimal level, but we are in discount of this higher time frame swing. We are testing the recent previous all-time high, range high, whatever you want to call it. And we have the confirmation. And so I'm just taking my chances here. And it's a nice idea. To the top, it would be 6R. Obviously, I'm going to end up probably TPing a bit earlier already once it starts going against me as usual. I also took Novo Nordisk today. It's a short-term idea with a potential longer-term exposure that's going to be left over after I TP'd on the short-term position. So we have this gap here, and you see this is more or less a reoccurring pattern. We break down, we bounce, we break down, we bounce, we break down, we bounce. And on higher time frame, it came a little back, to be honest. And we come back to this demand here, to this huge demand zone. And again, I could say I buy here with this demand zone and I put my stop loss here. It doesn't make any sense to me. So what I do is I wait for this confirmation. I enter, I put my stop loss below the low, because then it's like a technical barrier or somewhere where my idea is invalidated. And then I target this as first target, because if you look at this at the daily, this is a gap, and those gaps, they are like magnets. And once we go there, I will TP a significant amount of this position. It's a 50% bounce in theory. It's a 5R trade, and I will probably TP somewhat like 70 to 80% of this position. And I will keep the rest as higher time frame exposure, because the company is very interesting. They have lots of interesting products, and it's in general a very important industry also for the future, I think. But looking at this chart on higher time frame, I'd say this needs a lot more time, or yeah, probably a lot. So this is correct. We probably spent at least a few hundred days here, but hey, why not trading the range in the meanwhile? Another interesting chart to look at. It's a very simple chart, and I'm not here trying to predict whether like the World Cup is the perfect bottom here or how many days before or after. I don't care about that stuff. But what I care about is mass behavior. Why? Because in the end, it's about buying and selling, and people's behavior matters because if people behave differently, they also buy and sell differently, simply because they're maybe more emotional, they're maybe enjoying life more, paying less attention to things. All of those things matter, right? I made a very detailed post about that, how I see it, how I see people behaving around the World Cup, what it makes with them. And while I have no problem with the sport or with this event at all, I mean, FIFA is probably not one of the nicest companies out there, but in general, I have no problem with the sport. I played football myself when I was younger, for a very long time actually. And I'm not a big follower of these events, but I know about them and I know it does something to people. People behave differently. And as said, if you're interested, go Max, read the post. And just so that you understand the thesis, I'm going not on log on purpose. You see how the World Cup in Brazil, we had a 60% drop, but 50% when the World Cup started. We had a 60% drop when the World Cup in Russia started. And also World Cup in Qatar in 2022, it happened like pretty much at the bear market low. But you have to note that the Qatar World Cup was rescheduled for November in this case, December, November. But it was originally planned at the same time, June, July, during the summer. So it would still be around the bottom. But zooming out again, I see a reoccurring pattern. So we have the FIFA World Cup every 4 years, and it aligns with the cycle of BTC so far, and everybody's talking about the 4-year cycle, and it's aligning with the World Cup. And for the reasons I stated in the post, like the reasons of people spending more time outside, paying less attention to the market, getting more emotional, drinking more alcohol, maybe even start to gamble because the whole betting scene is also exploding. If you go into a major city, you see those betting offices, they call it. I don't know if this is the English term. Everywhere pretty much. They're growing like plants. And so many people go into the gambling and betting world during this time, and they need money for that. And if the market is down 50%, what do? You finally leave the scam market, you put your money somewhere else, you put it into the betting industry. And yeah, so as said, there are many reasons, liquidity wise, psychological, mass behavior wise, why this World Cup matters. And I'm not saying it's controlling the BTC price, but so far there's definitely a reoccurring pattern. And we have another World Cup here. And again, we are down almost 50% right now. It's starting at June, and we will see how things develop until then. Lastly, today, I see a lot of people talking about Warren Buffett's Berkshire Hathaway sitting on a record amount of cash. And I mean, are you surprised? Look at this chart. It looks like the SPX pretty much. And obviously, if you invest for a long time and if you have those positions since decades, rallies like the one on the SPX here, for you, it's exponential growth. If you're in the market since like 50 years or more, this move here, it's just bananas. All your positions go bananas. And overall, he's holding cash equivalents, and treasury bills. And to be honest, if the real is positive of treasury bills, if you get money paid for, you basically have no risk. You buy US treasury bills and the government is pretty much paying your profit, and you get a very, very reliable amount of profit each year. And with those amounts of money, this is a good investment itself. Obviously, if you only have like 1K or 10K or even 100K to your name, this alone will not make you rich. This alone will not be enough. For him, it's enough. And you also have to consider that his whole fund is growing. He gets more money from investors, and all of those positions acquired for decades, they are all like the good ones, all go parabolic. So it's no surprise this chart is going parabolic because this chart is going parabolic. And if you know what you're doing, you definitely not go big into the stock market here. And he said in this interview, because the reporter asked like, everything is so undervalued, everything is so cheap, there's blood on the street, something like that. And he said, no, it's not. Look at the chart, look at the valuations and everything. It's not undervalued. He's not saying, and also I'm not saying that we need to see a 50% drop immediately, but this can happen, and it has happened before. And historically and statistically speaking, after such a long bull run, it's not wise to be too bullish long term. Obviously, we see right now bounces occur, you can trade, you can still invest into sectors, but he's playing a different game. He's not playing the retail investment, the retail trading game. He's playing like the serious investing game for grown-ups, and this game works different. And yeah, it's no coincidence. I'm not surprised, but it also doesn't mean we need to crash immediately. He's just playing for the long term, and long term speaking, it's not a good time to go big right now. And so learn from him. And don't get scared just because, like, I see a lot of posts, people are so scared, or they say like, oh, he knows something, he knows something. Yeah, of course he knows something. It's pretty fucking obvious what's happening. But this doesn't mean we need to crash immediately 50%. It could happen, but we could have another big bullish leg higher and the market maybe rips another 50 or 100%, in this case the SPX or the S&P, and he will still be exposed to that. And he's not a guy who tries to time the market. He's just like trading valuations and stuff like that. And from this perspective, it's not a good time to buy. But obviously we are traders. We try to time the market and we try to refine our entries. And that's why we still look for something like that. And this is important to know. He's playing a different game than most people out there. That said, guys, I wish everybody a great week. Don't get lost in the news noise. It's so much back and forth, and it will intensify, I think, over the next 2 weeks. Trump loves to manipulate the market. I don't think that he's a guy who wants to blow up the whole world. I think he's just a ruthless businessman without morals, but his main goal is to manipulate the markets and to have control over them. So have a great week. Bye.